Hi, I'm Matt Shotroff, and this is the Standard's Passionate People. At the Standard, our brokers aren't just experts in insurance. They're passionate people who are champions for every client. And joining me today from Winnipeg, it's Miran Saradzic. Miran, you're a commercial account manager at our Winnipeg office, and today we're going to be talking about some real estate insurance. So, Miran, when a real estate owner is shopping around for insurance, one thing they really want to consider is best terms pricing. So, for those who might not know, what exactly is best terms pricing?
So best terms pricing, it specifically relates to a subscription insurance policy. Now, subscription insurance policies are generally only for high valued property policies, say a condo building or an apartment building. And what it means, a subscription policy, is there's going to be multiple insurance companies involved covering the risk. It can be two, can be eight. It can really be as many as it takes. And each insurance company takes a certain percentage of the value until you get to 100%. Now, how it relates to pricing is best terms pricing. Traditionally, how it's always been done is all the insurance companies who are involved, they charge a uniform rate based on the highest one being asked by the companies, right? So if you're dealing with a policy with 6 companies and they're all looking pretty well priced, and then one company says, no, we need double, then everyone's rate went double. That's how it was. Now, in response to the hard market, prices were obviously skyrocketing. Carriers were reducing how much property they wanted to write. And it was really evident out in BC and Alberta, where they actually banned the practice of best terms pricing. They're not letting this happen anymore from a government level. So what they've replaced it with is something called split rating. How split rating works, it's kind of self-explanatory, but every company involved, you get their individual rate and you charge them accordingly. So no more matching to the highest one. Companies will charge what they were always meant to. And there's no situation in which the property owner doesn't benefit from this. You're always looking at least a minor rate decrease, right? And it really depends on where your property is structured, but it's a huge advantage to property owners who are doing this for their insurance, because there's certainly cost savings and other benefits involved with doing split rating.
So, Miran, you touched briefly already on split rating, but how would you say that factors into the way you choose to deal with your clients?
Great question. I think split rating, it's very, very important right now. And again, like in my previous answer, it's very specific when you use it, right? Like only on high value property. So the clients that it makes sense for, it really is a no-brainer. We've been doing it for all the clients that meet the criteria, and we've been seeing significant rate decreases this year as a result of that. Which is nice. The last couple of years, it's been really tough on the property insurance market, especially. So to be able to come in this year at around even terms after all this inflation, or potentially even a decrease, it's a huge value to our clients. And really, to summarize, we live and breathe real estate insurance at the Standard. We're involved in the space heavily, whether it be through local associations, directly with property owners and developers, engineers. I mean, that you talk about the ecosystem of real estate. We're part of so many angles of it, and we get a lot of insight that way. And on top of our just proactive research in the market to make sure our clients are taken care of, I really believe that we do a great job. And as far as split rating goes, we've been very successful in implementing that for our existing clients and even new clients that we've been bringing on the past year. And yeah, it's really been a great addition to real estate insurance. Anything we can do to help our clients and provide consistency, right? Because real estate, at the end of the day, especially when it's an investment, that's what you want. You want to be able to budget accordingly, and these big increases of 30, 40, sometimes 100%, that's not feasible long term, right? So how can we help our clients make that experience more consistent? I think split rating solves it for many of them.
Well, that's great, Miran. And if anyone watching out there is a commercial real estate property owner and you're curious about insurance, be sure to give us a call or visit us online at standardinsurance.ca. And we're at the end of another episode, Miran. So that means we've got $100 on behalf of the Standard Insurance that we're donating to a charity of your choice. And Miran, why don't you tell us where we're donating today?
Thanks, Matt. I'm going to be donating to Canadian Red Cross's Ukraine Humanitarian Crisis Appeal. The reason I chose it is it just it hits close to home for me. My family immigrated from former Yugoslavia in the 90s as war refugees. Different circumstances, but we're very close to the Ukraine area. Those are our brothers and sisters, so I really feel for what's going on there, and I know the impact that the future generations will feel as a result of this. So my heart's with them, and anything we can do, I'm all for.
Absolutely. Well, thank you again for your time today, Miran. And thank you, everyone out there, for watching. We'll be back again soon.
Thanks, Matt.